viewers, this is Bhavana and I welcome you all to 19 Influencers Talk on COVID-19 series in association with TechXP. Well, viewers, to be a part of the final episode, we have an iconic personality with over 30 plus years of valued experience in the banking industry at Kotak Mahindra Bank. From being group head consumer banking to being the president corporate, institutional and investment bank to now being a whole-time director on the board of Kotak Mahindra Bank while overseeing the group's corporate, institutional and investment banking and wealth management businesses. Viewers, our next influencer in his journey has, during his stint in the retail business, steered Kotak Mahindra's bank from a single branch to over 600 branches and more than 1,000 ATMs across the country in a span of 10 years. Well, he's somebody who's played a crucial role in Kotak's journey from an NBFC to a bank and has spearheaded key initiatives in the corporate bank as upgrading the service and technology infrastructure, introducing a segment-focused structure with offerings tailored to the needs of clients, and integration of client coverage across capital markets, advisory, and banking products. Well, viewers, he's also a part of Kotak's Group Management Council that drives and oversees Kotak Mahindra's growth chart. A success story to reckon with, viewers. Our next influencer is philanthropic at heart, being acknowledged as the highest individual pledge raiser in the corporate challenge category by the United Way of Mumbai at the Mumbai Marathon for a number of years. Well, viewers, help me welcome the man with a success story to reckon with, none other than the revered Whole-time Director, Corporate Institutional and Investment Banking and Wealth Management, Kotak Mahindra Bank, Mr. KVS Manian.
Thank you, Bhavana. Thank you for such an eloquent introduction. Thank you so much.
Thank you, Mr. Manian. So, Mr. Manian, with all your experience, that the first question which comes to my mind and I would like to ask you is, what is the current impact of COVID-19 in the banking industry, and what are the potential implications you foresee in the near term, Mr. Manian?
The financial sector, banking belongs to that financial sector, is always influenced by the real sector, right? The problems of the real sectors obviously spill over to the financial sector always, and the two cannot be not connected. So as you know, the real sector, several parts of the real sector are really going through really bad times, right? I mean, nobody had, no scenario planners had ever thought about a zero sales situation for 2 months or a 3 month situation, 3 months, right? Nobody ever thought that this could happen. But that has really happened in many cases. So there are really badly affected sectors like the hospitality and the retail sectors. And there are some which are partly impacted and some which are actually doing better in this, right? The health, wellness, pharma, staples, these are doing better actually. E-commerce. So some of these are doing better, some of them are doing not so great, and some of them are doing really badly. And obviously all this is going to have an impact on the banking sector. Banking sector lends to many of these companies. So the banking sector problems come through bad debts that happen in the real sector, right? Because the banking sector lends to these companies, and therefore when these guys get into trouble, the banking sector gets into some losses on their loan portfolio. So that's the, so from the lender's point of view, from the banker's point of view, I think the situation is of an elevated risk that bankers see on their lending book. And therefore that is the biggest impact, I would say. There are other many small impacts. We'll come to that as we go along this talk. But that is the biggest impact of this COVID current situation. And therefore, bankers in these situations tend to look at their lending book far more carefully, want to avoid the kind of risks otherwise they would have taken. And on their existing book, they have to do a risk containment, right? So these are the big impacts to the banking sector. Immediate impact. Of course, as I said, there are many more. We will come to those. But in this situation, you must also remember that banks are, banks take public deposits, right? They take money of the small common man and have their deposits from these people. And their primary function is to protect that deposit, the returns on those deposits and giving back those deposits. So bankers by nature, usually, even in normal terms, are conservative people, because what banks do is they take 100 rupees from shareholders, but take almost 1200 rupees from deposit holders. So they are highly leveraged institutions. Normally, an operating companies, manufacturing companies, with debt equity ratios of 1:2, 1:3. The moment you get to those territory, you will say these companies are risky. But banks are leveraged 1:8, 1:10, right? So they are highly leveraged institutions. So there is a lot of public deposit, public money involved here. So therefore, bankers even in normal times are conservative, and these times make them even more conservative, right? So that's, I would say, is broadly the impact. Many more, but we'll come to that.
Sure. Thank you so much, Mr. Manian. Also, for the second question I wanted to ask you is that, how are the banks reassessing the current lockdown situation, and what measures are being taken to ensure continuity currently?
Yeah, no, so that's a very interesting one. Of course, as I said, one is assessing the risk part of it. That is what we talked about earlier. But there are many other aspects to the banking, because it's, in a sense, an essential service in the lives of a common man, right? You can't do without banking. You still need to keep money flow. You need to keep paying your purchases that you are making even in these times. So obviously, there is an essential service part of banking that is involved, while various laws, whether they define it or not that way. But the fact is that the banks have to continue working. So therefore, one of the biggest things that we have had to do, and all banks have had to do, is to keep operations continuing even while this COVID situation and lockdown and all that has happened. So some of the key functions, like our back office functions, our branches, they have had to continue functioning, and therefore we have had to get our employees out to those functions. We still have to clear checks. We still have to fill cash in ATMs. We still have to settle trade transactions that are happening. So all that we have to continue doing, right? From a common man's point of view, a common business point of view. So one of the things that has been challenging is how do we do that? And we have learned a lot of things in this process. How do you obviously cannot risk your health and lives of your employees. Yet at the same time, you have to deliver things to your customers that the customers do need even in these times. So we have learned a lot about how to protect lives of our, health and lives of our employees. How do you roster? How do you, make sure that we manage risk even there? So we have had multiple teams, A team, B team, C team, and we don't get them into the same branch at the same time. We get them at different times, so that the A team and B team are not talking to each other. And just in case an infection were to happen in the A team, it doesn't get transmitted to B team, and we are able to continue so what we call business continuity plans. So I think one of the biggest things we have learned is to make business continuity plans in situations we had never imagined before. I mean, banks had business continuity plans, even otherwise. But the kind of situation that we are in, we had never foreseen. And the kind of business continuity plans we had to put in place have been amazingly different. It has been a great learning experience. Yeah. And I think the employees of the bank and most of the sector has risen to the occasion in that sense, because by and large, banking services have not been disrupted in the country, right? And it is the credit of the employees and the banks who have the whole sector to have been able to do that. So that is one big thing. Second is, in this situation, we have found that there was already a move towards making things digital, right? And there was a big move happening in the banking sector for moving towards digital. And digital was already a very, very important theme, even pre-COVID. What COVID has done is dramatically moved the needle on the pace of that digitization. I think customers have also realized now, even customers who earlier had resistance to moving to digital and remain in physical because they had the comfort of the branch next door and things like that, have also made decisive moves to move to digital. And we are seeing a humongous drive, even in our customers. Of course, we wanted as well to be able to serve our customers better in these times, because the more we go digital, the more easily we are able to serve customers, right? It's more difficult to keep branches open. It is more difficult to get people into call centers. It is more difficult to get people into our back offices in this situation. We can only get a proportion of that, 10%, 20%, 30% of those people into the offices. So we also want the customers to move digital, and customers themselves, the kind of alignment we have seen in the customer's mindset and our own mindset on digital has been an amazing story, I would say. And that is something that has changed dramatically. Move to digital has really got speeded up, and I think it is here to stay. So I think that is another big change we are seeing and coping with. And of course, even that requires bankers to cope with it. When your transactions rise so fast on the digital medium, you have to capacitize them rightly. You have to have the processes around that correctly. So those again have been great learning experience during this. So I would say these are two big learning experiences, big changes that I'm seeing during these COVID times.
Sure. So a lot of major learnings right there, Mr. Manian. Also, I wanted to ask you that could you share some insights in the various innovations and change management in this space currently?
I did talk about some of them, right? The changes that we have seen in the way we manage BCP, the way we look at digital. For example, we during this period, we have found we have moved most of our trade transactions online. So we have adopted e-signature platforms. We have adopted digital platforms by which a customer can do trade transactions without going to the branch and giving the trade documents for processing. Earlier, most of our customers used to go to the nearest branch and deliver the trade papers there, the documents there, and we used to have a way of processing them by moving those papers across from the branch to a central processing center and things like that. But we have moved many of those transactions to digital signature, so we don't need that document that you signed and delivered. We have launched in this period, as you know, we have launched a video KYC product. So we have now recently, about a month back, we launched a full contactless account opening process. We already had a product called 811 where we used to open an account within 3 minutes.
Correct.
But even there, it was a part KYC because the regulatory instructions were that if you were doing a part KYC, because we were not meeting the customer and getting original documents, seeing them and verifying them as we opened the account, RBI said these are part KYC accounts, and over a period of 1 year, you had to complete the documentation to make it a full-fledged account. So the account could be used in a limited way for limited volume of transactions. I don't want to get into those quantums and things like that on this call. So there was a way of opening a part KYC account which became a full KYC account over a year. But with video KYC, the regulator said that if you have a video KYC process, you can open a full KYC account on day 0. And we launched that about a month back. So actually it is a program where within 10 minutes, you can open a full-fledged account sitting in your home just using video KYC. And it's a 2-step process, but within 10 minutes, you open a full account. So it's a great innovation, and we see a dramatic change arising out of this because if you see banks employed, because of this physical verification and meeting the customer, which was a regulatory requirement, we had a large force which used to conduct that activity, right? And now, because a video KYC is possible, we no more need to do that. We can just finish the whole process within 10 minutes using a video KYC platform. And it's a phenomenal innovation. I think we were the first bank to launch that product. And we see great potential in that, both from customer convenience perspective and our own cost of managing that convenience. Because finally, banks must deliver convenience at an affordable cost to the banks as well, right? And in this case, both of them, again, fantastic synergy between both. It is a cost efficient option for the bank, and it's a fantastic convenience for the customer. So that's again a great innovation. In this period, another big thing we've been able to do is, usually when you take a loan from the bank, the documentation is a really all customers hate it, right? I mean, the way you have to sign the documents keep going up and down. You sign each page, you sign reams of documents. So it's always a big pain, and there are stamp duty to be paid. So you take the document to the stamp, buy stamps, put it on onto the document, sign it, you send it to the bank signs it. So it was a highly friction oriented process. We've been able to, again, in a small way, launch a process by which the entire document signing process has been digitized. And we now have a platform where the customer doesn't again have to move from his office, but do the entire signing of the documents just sitting in one place without having to move from his office. So again, big potential to grow this. We have launched it in our MSME program, MSME segment. That's where we have made the beginning, because that's where the volumes are there and the documents can be. I mean, these are the clients which really need support at these times. So we have launched that, and we plan to extend this across various segments. So lots of innovations, lots of things happening on digital, and I'm quite excited. Actually, many times these crises, they have their problems. But if you look beyond those, of course, you have to handle those problems and they don't run away. I mean, you can't run away from those problems. You need to handle them. But if you keep the ability to look beyond those problems, there are immense opportunities as well that come. And some of these are customer opportunities, some of these are business opportunities, whichever way it is. But I think there are lots of opportunities that also arise in these situations. And I'm truly excited about kind of innovative things that banks have started doing. And especially, we have definitely started doing. A lot of other parts of the industry, I'm sure, is also thinking like us.
Sure. So, Mr. Manian, it's so good the way you are, looking at the crisis, and you're actually looking at more on innovation, because they say that necessity is the mother of all inventions and innovations in the case of your personal success story. So thank you so much on sharing on all those innovations. Now, Mr. Manian, now for the next question, I wanted to ask you is that what are your views, on the current government schemes related to MSMEs and, the moratoriums granted to the public sector? And do you feel that it is sustainable in the long run, Mr. Manian? What's your take there?
Okay, let me divide it into two parts, the scheme part of it and the moratorium part of it.
Yes.
Yeah. So let me first talk about the moratorium part of it. Of course, worldwide central governments have given moratoriums in this situation, right? Because as I said, this is an unprecedented situation, and we have seen crises, other crises. I have in my career seen several financial sector crises, whether it was Southeast Asian crisis, the global financial crisis in 2008-9, or the Southeast Asian crisis of late 90s, or the stock market crisis, Harshad Mehta crisis, or the NBFC crisis when we were in NBFC, actually not a bank at that time. So I have seen a lot of them, but this is truly different, right? This we haven't seen this kind of a crisis before. In none of those situations, we had like I said, zero sales situation, or the kind of impact for a few months, the GDP of the economy dropping from 100 to 10 and 15 and 20 and 30, right? Those kind of drops nobody has seen. So in that sense, this is a truly unique crisis, probably the ones that we haven't seen in our lifetimes, and where there was the pandemic of the last Spanish flu pandemic, or the World War, right? Probably those were the times that one has seen crisis of this proportion, right? So current generation hasn't seen it effectively, right? Most of us professionals who are currently in the jobs haven't seen those two crises, right? So given that it is an unprecedented crisis, I think the steps have to be unprecedented as well. I mean, the normal fixes that central banks applied in normal situations will not work in this situation. So I understand that, and therefore worldwide the central banks have reacted with moratoriums that they have granted to borrowers, and India is no exception. So in that sense, it is a good step. Some moratorium is good. because it helps. It has, again, banks have their challenges doing this moratorium, right? For example, when you give moratorium, what does it mean? That your inflows from clients cease. I mean, you are no more going to get inflows to an extent customers seek moratorium. But your outflows on your deposits will still happen. So banks have situations to manage in these things. Banks have to manage their liquidities very carefully. But luckily, the Reserve Bank and government in tandem have made sure that there is enough liquidity in the system, and therefore banks have generally been reasonably liquid at these times. So it has been an okay situation for the banks as well. So moratoriums, but there is a purist view on moratoriums, right? The purist view is what is that if you give moratoriums, there is a moral hazard. The customers will not be responsible in using the moratorium, and they will get used to not paying loans, and therefore it is not a good habit to perpetuate in borrowers. But as I said, the purist view is not something that one can take in this situation. So rightly, I would say that the Reserve Bank of India took a view that moratorium should be granted. So I am supportive of that move. But moratorium 2, then there has been a second wave of moratorium 2. Of course, in the moratorium 2, lesser customers are demanding, wanting to take moratorium. Again, many of them are acting responsibly because they don't want to be in a situation where they are just avoiding payment, because as you don't pay for several months, it also makes the burden more in the remaining months or going forward, right? And your debt levels go up. So customers also realize that, and therefore we have noticed that in the second round of moratorium, lesser customers have actually sought moratorium. And in fact, even we would like to be careful about the moratorium too, as to how it is granted. We must make sure that we do grant it to customers who genuinely need them, whose businesses need them, and who will come back. Once we support them temporarily, their businesses will bounce back. And we have to be cautious about selecting those customers. So, as I said, therefore, moratorium 2 has been also reasonably successful. So, I would say that central banks have been different. Some have been have given longer moratorium. Some have given 3-6 months moratorium. But I think we have been reasonable. Effectively, in India, 3 to 6 months moratorium has been given to customers, and the hope is that the businesses come back. Yeah. I will talk more about customers and how banks are, how as a bank we are looking at customers and whom to support, whom not to support slightly later. So that is about moratorium. But so therefore it is a good thing. Too long a moratorium is not a great thing, but I don't think we have been in a too long a moratorium kind of a situation. We are okay. Coming to what happens, I mentioned to you earlier in our this talk that bankers are conservative and they get the risk levels have gone up, because obviously if the businesses are not doing well, more businesses will fail now than they failed in the normal pre-COVID situation, and therefore the risk levels go up, right? So obviously what that does is bankers become more conservative in lending, right, to customers. So let me touch upon that first. So what happens is, banks look at 2 or 3 ways. One is they're looking at a customer and saying that, okay, this customer is a good customer. His business model fundamentally is good,
Sure.
right? But it is temporarily impacted because of COVID. But we feel confident that it needs some support during the next 2, 3, 4, 5 months. But the business model is sound and is sustainable, and it will come back to its normal in 3-6 months time, right? And that's a customer that we must support, right? Because it is the customer's need, and we are confident that his business is sound, and therefore we will want to support that, right? That is one situation. So clearly the banks must support. Even if they are conservative, they will support. And banks want customers. Banking is a competitive space, right? We also want to retain our good customers. So this is a good customer we will retain. Second, are situations where due to COVID, the business models have changed, and they will take a long time to or they may never come back. I mean, the business models are already destroyed. You have to think of a new way to do business. The way you did business pre-COVID is not the way you will do business going forward. And therefore, then we have to assess whether this company or this business, it may be a small business or a large business, will be able to make a transition to the newer way of doing the business or no. If it is, if we get a sense that yes, the business is trying to do business in a newer way and it will be able to sustain itself going forward, though not in the same way as it did in the pre-COVID situation, again, we would like to support it.
Absolutely.
But there may be situations where we are not confident enough that this transition will happen, right? And if that is the case, we would like to not put further money, good money behind bad money. We may already have an exposure. Actually, we will want the money back. It may be possible, it may not be possible, but we may not want to put more money behind it because we are not confident of that. Third situation, business is good, but it has taken a small medium-term impact. But the business needs more money infusion to make it work in the future. Yeah. But what should that money be? Will that money be only what the bank will bring in, or will the customer bring in some money into the business and the banks will come in along with that and make it happen? So if the customer is willing to bring in more equity money, what we call the equity money, if he is willing to, if he is, first the customer must show confidence in his business, and the way he shows confidence in his business is he is willing to put in more equity into the business, and therefore we can supplement that with debt that we bring into the business. But if we have to only bring in the debt and no equity comes in, that's not an ideal situation for a bank. So this is something that we will worry about. So, but if the customer wants to bring in equity, shows confidence in the future of his business, we are happy to again support them, right? So that is third. Fourth, our customers where their costs are very high. And as I told you that, you know, even in our business, we have managed to serve customers at low cost, right? Cost is an important aspect. So if you reduce cost, your business becomes more viable. But can you reduce cost? Are you willing to reduce cost? Are you able to reduce cost? So these are questions that we will ask a customer and understand whether he can or not. And if he is able to, he may still be a viable business, though he is otherwise not viable at the old cost structures, right? Old high fixed cost structure is not viable. So these are some of the things that go into evaluating whether you support a customer, how do you support a customer, when do you support a customer, when do you give him a moratorium, when do you give him more money, all of that, right? But having said all this, obviously in this situation when risks are so high, bankers tend to be slightly risk averse. And just because there is a lot of liquidity, and for example, take our bank, our deposit flows are continuing, right? Because even depositors want to put money in safe institutions, and therefore the flow, if at all, has increased, right? So our deposit flows, but where do we lend at? Just because we have liquidity does not mean bankers will lend, because if by lending, your risk of losing money goes up, even if you have money, you will not want to lend. So this is a conundrum that in all countries this happens, because in risk off environment, when everybody is off risk, you don't want to lend, there is money, but there is no appetite to lend. This is where governments step in. And that is where schemes of government which enhance the ability of banks to lend help. And an MSME scheme that you talked about, sorry for the long-winded answer, but you know, I had to take you through the logical way to that. So the MSME scheme is the government's way of improving the risk appetite of banks. So what have they said? That if you had lent the company 100, you can lend him another 20, because in these situations that 20 matters a lot. It helps him see the next 3-6 months through. So you can lend him 20 and the government will guarantee that to the banks, so that the banks are not taking the risk on the customer, but effectively they are getting a sovereign risk to lend. And even the rate, because it is a sovereign risk, the banks will lend at a lower rate. So it helps the MSME in getting money, one, and getting money at the right rate. And therefore, it helps them survive, and it helps the banks protect their lending to these companies. So I think these are schemes that are very good. They are useful. And worldwide, many central banks and governments have a combination of the two have done it. And I think it's a good scheme, and we are quite excited. I think not all customers may still want it, because some of them may say that, why do I take debt? I'm okay, I can manage this situation. So not all customers take it necessarily, but we are seeing 60-70% of the MSME customers wanting to take this loan, and it's a long-term loan. It's a 1-year moratorium and 4-year loan. So therefore, it's a long-term loan. It helps them tide over this crisis, and it's a good scheme. We are quite excited, and schemes like that help.
Sure. Thank you so much, Mr. Manian. You really took us through the entire, knowledge which you have, and in terms of, whatever understanding you shared on that answer was absolutely brilliant. So thank you so much. And Mr. Manian, just, for our departing question, and I really would want this to know to the viewers, is that, Mr. Manian, you come with such a rich experience of 30 plus years, which is so valuable in the banking space. What is your advice to the viewers and the banking workforce currently?
Yeah. I would assume that the viewers will include bankers and our customers here, other real sector business. So, my big learnings out of COVID have been, I'm just thinking of the answer as we speak, but clearly there are a few learnings. One is that don't, in all these situations, do not get fixated with a view, because holding a particular view can be your undoing, because nobody has seen a situation like this. In all crises, I think we should keep an open mind. We should keep changing our view as facts keep changing. And the fact is that in this COVID situation, when we started in February, everybody thought one lockdown and we are out of it, right? And we have seen what has happened. So you don't hold a view. Yeah, I think holding a firm view, in many, many times it is considered a virtue, right? Holding a view is a big virtue. But in crisis times, one of my biggest learnings have been, and actually I have tried to keep an open view. I think you should think of multiple scenarios and keep evaluating today versus the scenarios that you have in mind. And don't hold a particular view that a particular scenario will develop. I think it's very, very important, because holding to a view can really cost you a lot. So that is one of my biggest learnings, I would say, in this COVID situation. The second, I think, is that it is unfortunate but true that it takes a crisis for people to really get things done which otherwise also they could have got done.
Absolutely.
Right? And this tells me that we must, in normal, of course, in crisis times, we do these things, and we have, like I told you, even as a bank, we have done certain things, right? I look back and say, could I have done this? Did I need this crisis to have got this done? Could I have got it done earlier? So I'm going to carry this learning beyond COVID crisis. And I'm going to, that sense of urgency that we need to get things done, I think we need to maintain, whether a crisis or not a crisis. I think this is again a second thought that I'm going to carry beyond this crisis. I think it's a very important. So these are not necessarily for bankers alone, it's for anybody. So I think this is again a second learning I have had. The third is, of course, the learning itself. The fact that you may have 30 years of experience, you may have whatever, you may have 20 years of experience, you may have 5 years of experience. But if you do not have, and even at 30 years, you're still a student. 30 years of experience, you're still a student. I have learned new things even during this time. And I have learned them from much younger people. I have learned them from colleagues who are probably equal age, older people, younger people, anybody. I think what this has taught me is that there is never an end to learning. Even in every situation in business, there's so much to learn. And if you keep your mind open to learn, that's where innovation actually happens. And a lot of these innovations happen if you keep an open mind to learning. So these are my generic thing. The last thing I carry forward with this is, don't forget that all crises are an opportunity also.
Hmm.
It may sometimes seem heartless to be thinking about the opportunities while managing crisis. But the reality is life goes on, human race will continue. Finally, human race will find a way to conquer this disease. It's one of the most resilient races. That's why we are where we are today, right? So I think we will overcome this, but there will be a lot of opportunity overall in that broad sense. But looking back at as a bank, I also think in the banking space itself, we will get enormous opportunity. I do see consolidation, strong getting stronger. The weaker ones will find it difficult to come through this phase of crisis. The stronger ones will learn to manage this phase better. They will, in this situation, deliver better value to their customers, better value to their shareholders, and therefore be more able to serve and get more business going forward. And therefore, I see opportunity for at least a bank like ours, where we think we will gain at the end of this crisis as a more solid institution delivering right value to customers and shareholders. And I think there is an opportunity in this. And like I said, we have to look at opportunities beyond these problems. These problems will be there, but they will end.
Sure. So thank you so much, Mr. Manian. The entire conversation has been so enriching, and you've got such an amazing mindset. You know, I always, in all my conversations, what I really look forward is the mindset of the influencer. And it definitely goes without saying that what a brilliant leader you are, that during this time you've taken out your precious time for the talk, and you are here enriching the views and opinions, and you are giving your knowledge. So once again, thank you so much, Mr. Manian. It has been an absolute pleasure having you on board. Thank you so much.
Same here. It was a great pleasure talking to you, Bhavana. And I really hope, these we come out of this, the world comes out of this, and we come out stronger. All the best to you on your series, and thank you very much for this stretch.
Thank you so much. So viewers, that was Mr. Manian for the final and the last episode of 19 Influencers Talk on COVID-19. Thank you so much all for watching it.